Hi there, traders. This is Brad Gibble with the FX Market Insight for Thursday, the 20th of August. All right, as we come through the middle of the Asian session, what a difference a day makes. The US dollar has really turned around. Excuse me. Now, just one of the key things. This is the minutes. You know, I didn't expect a lot from the minutes, to be honest. The Fed minutes of their last meeting. Now, I think a lot of traders were expecting, or the whole market was expecting, with the improved non-farm payrolls, the improved US CPI numbers, that the Fed would come out with some sort of plan and really sort of say things are looking or aren't looking so bad. It was sort of the opposite. There was no plan, no strategy around what they're going to do. And that basically put it like a cloud over the market as far as the US economy goes. And then sent the US dollar skyward as the US dollar safe haven trade really kicked back in. Now, this move has been probably exaggerated, primarily because it just broke down through the last long-term support line, right? So there's a lot of long positions taken out, a lot of short positions put on, and as you can see, it broke back up through this level. There would be a lot of pain there as a lot of old positions are flushed out, new ones are flushed out as well, and we're back in the range. And you know what? The Fed, the outcome of these minutes or the meetings generally has a longer term impact in the market than, say, just a normal economic number. So this is the initial move. If we get I'd say if we get a weak US number or something, or a bit more uncertainty in the news with regards to politics or anything regarding the US dollar, we could see the US dollar really move aggressively to the top side. Now, what's that done for us? Okay, well, the easiest way to show you this is the daily market insight. Now, this is the daily market insight for yesterday. Okay, just giving you a look. It's just pre the release of the Fed minutes. You can see all the dollar pairs, most of them, except for dollar yen, were moving long-term, short-term to the downside. And we were looking to get aggressive, get short the dollar, okay, on a break or on a rally. And the dollar block pairs, okay, below that, well, these were all shooting to the top side. And we're looking to get long these pairs. But this is where the importance of the macroeconomic fundamentals, and the key part of that is the central banks, they come out and tell us what's going on, and it can make a dramatic impact. What has it done for us? Well, this is the analysis today across the board. As you can see, the dollar pairs, they are back in the range, so they aren't necessarily going up long term, but short term, they're all flying to the top side. And if you look at the downside here, the dollar block pairs are all shifting to the downside. Now, the Aussie is the only pair at the moment that has broken through the daily support line as well. So this thing is, you know, really susceptible to a decent move to the downside. But as you can see here, solid break on the euro and the Kiwi, they are very close to breaking down through daily support trend lines. If that happens, you get a good flush out of the long positions, and these things can go for a run. So once again, I mean, this is pretty dramatic, right? Everything set up, dollar weakness. The next day, the Fed minutes come out, and it's completely reversed. So that's what we've got to deal with. If you look at the charts, okay, I've left these trend lines exactly where they are. You can see the price action here as some of these trend lines. Kiwi just had enough to get above. Aussie had a bit of a crack above those recent highs. Same with sterling and euro. Okay, so what we've done is we've seen a complete flush out of short positions. This reinvigorates a potential major correction. You can see here, let me just clear the screens there. You can see the Kiwi hasn't quite broken down through its level, and euro as well. Now, sterling's broken down, but it's actually got its longer term trend lines are much further apart. So I'm not really partaking, but the Aussie is broken down through its long-term chart and looks like a sell back towards 72 the figure. So that's where it is now. Dollar yen has rallied back into the range. That'll look a little bit different when you widen out that trend line. It'll look like it's just trading sideways again. And you can see dollar CAD here. It's broken through resistance just under 132. Sort of back in the middle of the range here at the moment. Oil, and this is really going to come back down to oil. Now it's moved back into the range. It's going to come down to what oil does. If it falls, I think we just see dollar CAD trade drift back into the range. So to me, when you come back and look at your analysis, okay, you're trying to work out which pairs to buy or sell. The dollar pairs at the moment, to me, are sort of too mid-range. There's no long-term sort of structure to give you that extra drive. Right, I should actually put up here the macros for the dollar. Okay, at the moment it's sort of probably bullish. Okay, and one takeaway, right? This is where you need to understand the fundamental market. When you look at what the impact from the non-farm payrolls to the US CPI numbers, okay, strong numbers, the dollar was falling. Okay, that's because there was not so much concern about the US economy. Okay, the US dollar as a safe haven was unwound. So what we're seeing at the moment is strong numbers, dollar goes down. Weak numbers, the dollar goes up, right? You've got to understand that principle. That's what's in play at the moment. Okay, this is the geopolitical situation. The central bank is making comments. We can see the impact of what that does and what the impact of the data is. It makes it easier to trade. So it's a complete shift from the normal market conditions. All right, so just bear that in mind as you start trading. Weak US numbers, you're going to see a stronger dollar and vice versa. All right, so just keep an eye on the ECB meeting accounts. Okay, that's not as important as the Fed, but I tell you what, it can have the same impact on the ECB. If there's some sort of weird comments out of that, the euro is set up for a bit of a bloodbath from the downside. That could very well come into play. And keep an eye on the Philly Fed Manufacturing Index and the jobless claims. These things, as I said, you get weak numbers here. We can see the US dollar rally very quickly. And we'll continue that rally. And that's where we are, guys. It's tricky conditions. You've got to be ready. You've got to be flexible. If you have been running positions over the last couple of days and running with that dollar weakness, this is why you've got to have those trailing stops in place, or at least move your stop to break even. You don't want to be losing money on opportunities like that, because when an event like this turns around, it completely shifts the market. And if you've got big stops in play, you're going to get hosed. All right, guys, that's it from me. Pretty interesting trading day, and be interesting to see how the market goes over the next 24 hours. Cheerio.